Hey everyone, welcome back to Gold Rush Reporter. I'm your host, and as always, your trusted gold and silver analyst. Today, we're diving into something that goes way beyond just prices or charts. It's about freedom itself. Because when money loses its honesty, society begins to lose something far more valuable than wealth. It loses independence. So stay tuned, because what we're about to talk about could completely change how you think about money, gold, and the entire financial system. And if you value financial truth and personal freedom, don't forget to like this video, subscribe, and share your thoughts in the comments below. I really want to know what you think about this. Now, let's get into it. The truth is, gold will always be connected to whatever monetary system we end up with. It's a constant. And history keeps proving that point over and over again. Anyone who has been following the global economy or the analysis we've been doing here knows that we are nearing the end of a grand experiment that started more than 50 years ago, back in August 1971, when President Nixon made the decision to disconnect the US dollar from gold. That move completely changed how the global economy works, and we're still feeling the consequences today. Recently, an old friend of mine, David Morgan, the author of The Morgan Report, shared an article that hit home for me. The title says it all. Freedom dies when money lies. Why sound money is the foundation of a free society. It's a powerful statement, and the deeper you go into it, the more you realize how true it is. Because throughout history, whenever money loses its integrity, freedom always follows right behind. It's not just a coincidence. It's a direct cause and effect relationship. Think about it. Money isn't just a way to buy and sell things. It's the lifeblood of our ability to act freely, to make choices, and to live independently. When that system gets corrupted, when governments and central banks start playing with the rules, inflating the supply or manipulating rates, everything downstream starts to decay. The value of savings erodes. The reward for working hard and saving gets smaller. And soon, people lose trust. Trust in the system, trust in money, and even trust in the future. That's exactly what we're seeing play out in the modern world right now. As David Morgan says, when money lies, freedom dies. Because when you can no longer depend on the currency you earn, you're forced into speculation. You stop saving and start gambling. Not because you want to, but because you have to, just to keep up. And that's the kind of pressure that destroys stability, destroys independence, and ultimately eats away at liberty itself. This first part sets the foundation for what we'll explore deeper in the next sections. How inflation, manipulation, and policy have quietly reshaped our freedom, and how gold and silver could once again be the solution to restoring honest money. As we move deeper into this discussion, let's really break down what happens when a nation abandons sound money. Because when we talk about inflation, currency manipulation, and the loss of financial integrity, these aren't just abstract economic ideas. They directly affect how free or dependent people become. In a truly free society, individuals make decisions based on trust. They trust that the money they earn from their hard work will hold value over time. They trust that when they save for the future, their savings will actually mean something. And they trust that their investments will reflect real economic growth, not be swayed by the hidden hand of unelected technocrats operating behind closed doors. But once that trust is broken, once a central authority starts manipulating interest rates, printing money out of thin air, and flooding markets with fiat currency, everything starts to distort. Prices stop representing reality. Markets stop rewarding responsible behavior. And suddenly, the people who play by the old rules, those who save, who invest carefully, who live within their means, find themselves punished instead of protected. This is one of the biggest reasons why so many people today are being pushed into riskier investments. It's not because they've suddenly become gamblers. It's because the system leaves them no choice. When the currency loses purchasing power, you can't just hold cash and save like your parents or grandparents did. You're forced into the stock market, real estate, or other speculative assets simply to keep up with inflation. It's a silent trap that keeps people chasing returns just to survive. If we had honest money, meaning money that can't be printed endlessly, the natural state of things would actually be deflation. Prices would slowly go down over time as innovation and efficiency improve. Imagine being able to save money today and knowing that 2 years later it could actually buy more, not less. That's the power of sound money. It rewards patience and prudence. But under the current fiat system, that's impossible because constant inflation is built into the design. Inflation is the most silent and dangerous form of taxation ever created. It steals from every single person who holds money without any law being passed or any vote being taken. It quietly erodes purchasing power, devalues savings, and transfers wealth from the working class to the elite who own assets. And the worst part? Most people don't even notice it happening. They just feel like life keeps getting more expensive, even though they're working harder than ever. This isn't just a financial issue, it's a freedom issue. When you can't save, you can't plan. When you can't plan, you lose independence. And when independence is gone, freedom disappears right behind it. This is how the system creates dependence, not just on money, but on the state, on credit, and on corporate structures that benefit from chaos and instability. When we talk about dependence, it's not just about economics, it's about control. Once people lose the ability to rely on their own savings or the value of their labor, they slowly begin depending on institutions that can manipulate those things for them. Governments know this, and history proves that it's one of the most powerful tools ever used to keep people compliant. Let's be honest. When people can't save, they can't plan. And when they can't plan, they can't act freely. They start relying on credit cards, on government benefits, or on subsidies just to survive in a system that constantly devalues their money. It's not because people are lazy or unwilling to work. It's because the system is designed to make saving meaningless and spending necessary. The more dependent a society becomes on government handouts, the easier it becomes to control that society. I've seen this firsthand in various parts of the world, including places like Puerto Rico, where government support programs have made it increasingly difficult for small businesses to find people who actually want to work. Many people realize that if they accept a job, they'll lose the benefits they receive from the state. So they simply don't take the job. Over time, that creates a population that no longer sees work as a path to freedom, but as a trade-off against comfort. And that's exactly the kind of environment that leads to long-term decline. David Morgan said it perfectly in his article. Dependency is the opposite of liberty. When you become dependent on a system that manipulates your currency and your livelihood, you stop being free. It might not look like a dictatorship, but the outcome is the same. Control is maintained through financial weakness instead of physical force. And as we've seen throughout history, whenever money collapses, political freedom usually follows right behind. Look back at the Weimar Republic in Germany after World War I. Hyperinflation destroyed their currency so badly that people needed wheelbarrows of cash just to buy a loaf of bread. And when that happened, the social fabric collapsed. Desperation set in, and authoritarian leaders rose to power by promising order and stability. That's how Adolf Hitler first gained attention. During the chaos of financial collapse, when people were desperate for something or someone to fix things. The same pattern has repeated itself countless times in Venezuela, Zimbabwe, Argentina. Wherever currency collapses, chaos follows. And that chaos always opens the door for stronger government control, loss of civil liberties, and the end of individual freedom. Even in the United States, the steady erosion of the dollar's purchasing power over the last century has gone hand in hand with an expanding federal government and a shrinking private sphere. The lesson here is simple. When money loses integrity, societies lose stability. Inflation doesn't just drain your wallet, it reshapes the culture, the economy, and even the moral backbone of a nation. People become anxious, short-sighted, and easier to control. And that's not an accident. It's the natural outcome of a monetary system built on debt and deception. When we think of control, we often imagine armies, surveillance, or censorship. But the most effective control is invisible. It's economic, it's psychological. And it's happening right now through our monetary system. The government doesn't need to confiscate your freedom directly. It simply needs to control the value of your money. That's what I like to call the invisible handcuffs of inflation. Here's how it works. When your purchasing power erodes year after year, you're forced to work harder just to stay in the same place. Your savings buy less, your wages lose value, and your time becomes worth less in real terms. That cycle quietly traps millions of people in what feels like endless effort. Yet somehow, they never truly move forward. And while the public struggles, the system thrives. Because the people at the top benefit from the very inflation that punishes everyone else. This isn't just speculation. Look at the way government debt has exploded over the past decade. Every $1 trillion printed devalues the savings of ordinary people, while pushing up the prices of stocks, real estate, and commodities owned by the wealthy. The result? A widening wealth gap that ensures the rich get richer, not because they're smarter or work harder, but because they're closer to the money spigot **. And that's exactly what central banks around the world are preparing for: a complete reset of the system. Gold is the signal, not the symptom. As Peter Schiff warned, this isn't about inflation anymore, it's about credibility. When nations stop trusting the dollar, they're not just diversifying their portfolios. They're preparing for a post-dollar world. Countries like China, Russia, and even emerging economies in the global south are accumulating gold at historic rates. They understand that physical assets can't be printed out of thin air. They're quietly building what could become the foundation of a new monetary system, one that's not dependent on the US dollar or the Federal Reserve's policies. This is the real story behind the recent surge in gold prices. It's not about short-term speculation. It's about power and survival. Because when the dollar falls, everything tied to it begins to unravel. US treasuries, debt markets, and even the global trade structure that's existed for over half a century. And here's the critical part. While all this happens, most investors, savers, and everyday workers are completely unaware. They're told by mainstream economists that inflation is under control and that gold is just an old relic. The same message they told people before every major financial crisis in history. But make no mistake, gold and silver are not relics. They're reality checks. They expose the weakness of fiat systems and the lies that sustain them. Every ounce of gold being bought by a central bank today is a vote of no confidence in the US dollar and the Western financial system. And this movement is accelerating. As faith in paper assets continues to erode, the flight to real assets is becoming unstoppable. Gold is already signaling what's next: the fall of the dollar's dominance and the rise of tangible value. We are now entering the stage where the writing on the wall is impossible to ignore. Gold isn't just rising because of market speculation. It's screaming a warning that the global financial system is on borrowed time. The US dollar, once considered untouchable, is now being quietly abandoned by central banks, foreign investors, and even long-term US allies. The credibility of American debt has been stretched so thin that it no longer represents safety. It represents risk. For decades, the United States has enjoyed the privilege of printing wealth while the rest of the world produced it. That privilege is now expiring. The shift toward gold isn't symbolic. It's structural. Countries like China and Russia are preparing for a future where trade, reserves, and trust are anchored not to the dollar, but to tangible assets. Gold has always been money. Fiat currencies come and go. Gold stays. And silver, though often overlooked, has a similar destiny. This is why we're seeing central banks not only stockpiling gold, but also reducing their exposure to US treasuries. The message is clear. They no longer believe in America's fiscal discipline or the Federal Reserve's control over inflation. The debt is too high, the interest payments are too large, and the political will to fix it simply doesn't exist. And when confidence disappears, value follows. But here's the key takeaway. While nations are preparing, most individuals aren't. Many still hold most of their wealth in dollars or dollar-based assets, thinking everything will go back to normal. It won't. The era of cheap credit and endless bailouts is ending, and what comes next is a hard reset. It's not just about economics, it's about survival in a new monetary order. That's why both gold and silver are more than just investments right now. They're lifeboats. They protect purchasing power when fiat currencies fail. They preserve wealth when trust in governments and banks collapses. And they represent freedom, the kind that can't be printed, taxed away, or digitally switched off. So, as we close this analysis, remember, when Peter Schiff warns that gold is the first shoe to drop, he's talking about a chain reaction that could redefine global finance. The dollar's decline will not be gradual. It will be sudden, accelerated by panic and loss of faith. Those who wait for official confirmation will already be too late. The real preparation happens now, while the system still appears stable on the surface. Gold is not just a hedge anymore. It's a signal. Silver is not just an industrial metal. It's a mirror showing what happens when confidence meets reality. And this transformation, whether you're ready or not, is already in motion. Thanks for watching. Gold Rush Reporter, where we uncover the truth behind the markets and expose the real forces driving gold and silver. If you found this breakdown informative, make sure to like this video, subscribe, and turn on the notification bell so you never miss our latest updates. Stay informed, stay prepared. And as always, this is Gold Rush Reporter, your trusted voice for gold, silver, and financial reality.